So the rand over the course of the year, 16% stronger than it was the prior year. And I mean, this is something that affects all mining companies, doesn't it?
Yeah, certainly, Stephen. When we look at your headline earnings, and we were very happy with your numbers, the rand number affected is about R1 billion then, which put us back to the numbers where we were at the height of the bull market. So I think the basic result is very strongly supported by increase in volumes and by cost reductions in many parts of our business. That has made us strong during this time.
Of course, also like a number of companies that have reported back recently, the second half significantly stronger than the first half. So that turnaround did come in the second half. Has it continued into the new financial year?
It has certainly continued into the new financial year, but if one just consider our halves, the last half comparing to the previous one, 178% up. Comparing to the half before that was 1,300% up. So I think the turn has worked for us. And the one metal where we suffered probably most was actually manganese pricing, coupled to the rand. And the last half that has just continued, we saw those prices were up 78% again.
Well, Thela, I mean, we were chatting about metals prices and global demand going forward from here. You were talking about copper, that copper could be a little bit inflated because we're not seeing that growth coming through in the US housing market. And yet African Rainbow Minerals on Friday announcing a copper project in Brazil with Vale. So copper being added to your portfolio. What's the outlook, do you think, for the metals in this company?
Right. Well, I think that and I think copper, the industry dynamics of copper are very strong structurally. I think it's a metal which you want to be in than not be in. The only question I want to ask the kind gentleman is, this Konkola mine at full production or at 75% production, if one can call it that, where will it fall in the cost curve?
It comes in the cost curve just below the 50% quartile at this stage.
Just at this stage?
At the price of about 107, that is the price where it's going to come in. But the mine is going to develop in a number of phases. The first phase is a 45,000 ton copper production mine. The next phase is what we call Area A, that could probably take it to 100,000 tons copper, and then there's further potential there as well. So it is in different phases. But even with a long-term copper price of about $2, they still meet your hurdle rates. We've used a long-term copper price of about $2.50. Okay. And we know the price is sitting well over $3 at the moment. We think those are a bit high.
Okay, so you are prepared for it to come back a little bit and still be very profitable with that. I mean, your view on the baskets of metals that ARM has as an expanding basket?
Well, I think first of all, ARM is a company that is doing a great job of growing into the projects which it has selected. And I think that the combination of metals is actually a good one. I think you still own Harmony though, correct?
We still own 14.8% of Harmony.
So the question is, with industrial metals as well as platinum as a precious metal, why are you still holding on to Harmony, which is, one can say compared to the quality of mines you have, this one is a lower quality mine. And it's another kind of metal which is mostly in South Africa, and it's much more expensive to go into.
I think Harmony is going through a transition at the moment where they're closing down and continue mining in some of the older areas. They've got a number of new projects coming up to line. They're doing very, very well with the process in Papua New Guinea. So we see significant upside still in the value of Harmony over the next couple of years, and we think we will stay with that share.
I mean, you're sitting with a pretty strong balance sheet at the moment. Debt to equity also very low. You've brought that down significantly since this time last year. How will Konkola ramp up perhaps costs, and how will that add to stress on the balance sheet?
It will make very little difference to the balance sheet. We have an $80 million US dollar loan to help with the funding of that. We have enough cash, and looking here ahead, I think it won't change our gearing at all. We have in the pipeline over the next 3 years, with our partners, we're going to spend 17.9 billion or 9.5 billion rand for our portion of the capital expenditure, and we think that's very doable.
I'm looking at your costs, and you did point out in the commentary that you have been controlling them, they have been coming down. What's they looking like going forward, though, particularly with the wage increases we're seeing across the mining sector at the moment, with those electricity tariffs coming through from Eskom? What sort of pressure does that put on costs going forward?
One area that makes us very fortunate if we talk costs is we continue with our aggressive growth. Our iron ore is going to go from 10 million tons to 16 million tons over the next 2 years. The coal project that we did with Extrata, that's building up and will show significant increase in volumes in the next year. We're building the large-scale nickel mine, which is sitting around about 9,000 tons of nickel per annum. That's going to 20,000. So I think volume growth will help us with labor cost pressures and that sort of thing. As far as the power costs go, only two of our, we have two smelters, a ferrochrome and a ferromanganese smelter, and they feel the pressure of the cost increase significantly. We have changed some of those operations. We're trying to do away with the older ovens that are more expensive, but that's probably where the cost of power will hit us most. On our mining operations, most of it is open cast, most of it is diesel operated, so we actually have very little effect of the power increases on all the mining operations.
So 2 years ago, I think last year, Billiton came out and said that they don't think that nickel is as favorable a metal as they had always thought it was. So they're downscaling or reducing the exposure whenever they get a chance. I think they gave up on a big project. I can't remember the name of the project. But you seem to love nickel. You seem to do well at it. What is your outlook on the metal?
I think when one invests in any metal, it needs to feature on the lower end of the cost curve. Okay. If you're on the wrong side of the cost curve and the prices fluctuate, you will be in trouble. Our nickel mine is sitting at about on a 25% on the future cost curve, so it will certainly withstand the up and downs. When we look at the feasibility and we approve that, we're at a long-term price of about $7. It's way over 10 today. We certainly think our nickel is well positioned into the future.
Hello, often when we're chatting in studio to guests and they like the diversified miners, it's usually a toss-up between Anglo or BHP Billiton, depending. How about African Rainbow Minerals among those? Because it is diversified, it is exposed to base metals, obviously exposed to any growth that does come through from Asia. At 150 Rand, would this be something you'd be looking at?
Well, I actually, of the three diversified miners, I actually prefer this one, because you don't control price when you're a mining company. It just comes to you. And as Andre just said, if you're below the, if you're below the average cost of production and you're at 25th percentile, you're actually doing all right. And I prefer the fact that if you can't control price, you can at least control volume, which they do very well. So one of the things that you always want to look at is the potential for volume growth. And can you get that volume growth without the fatalities, without environmental, all kinds of disasters? Certainly. ARM seems to do that very well. Now, the dividend yield of ARM is never good enough. It never gives you a 4 or 5% dividend yield as a good buying price. But I think that if you understand that commodity companies are growth companies, and the growth you get is more volume-based than price-based, and it's good quality growth, then I think ARM should really be a good pick. Also, what's very important with ARM is that, like Billiton, they have demonstrated that they know how to respect shareholder capital. So the return on equity is actually going to keep going up as they bring down the unit costs.
Andre, I'm just looking forward, and of course we do have all concerns about double dips in the United States, slightly slowing growth in China. I mean, how do you see the picture for commodities and resource companies such as yourself going forward? Do you think we're going to hit that double dip? Is this something that keeps you awake at night?
We certainly, a fair amount of our metals going to China, some going to Japan, some going to India, and we're quite close to those buyers. We think the metals that goes there, like iron ore and manganese, is still very well positioned. Manganese, they may be high on the stockpile at the moment a little bit, but the pricing is still looking very strong. iron ore, certainly, we're a very small producer, but we've got outstanding quality of iron ore. The same with manganese. And we found through the dips that the quality products always had a role to play, especially when people look at the cost of their furnaces, putting in high quality material helps. And I think that will stand us in good stead, even if there's a bit of a downturn. We think the market will go up and down. It will certainly not continue to go up in one straight line. And we see a little bit of that at the moment. But the China growth and the urbanization still position there well for the sort of metals that we produce.
Of course, you mentioned the dividend. It's not one of those great big dividend payers, but you did increase your dividend from 175 to 200 cents. So it must give a sign of confidence going into the new year that things are looking okay.
We were certainly very happy to announce a dividend of 200 cents. That is a 14% increase on last year, although we had lower earnings. But our balance sheet and our way that our business is producing makes us confident with that. It's the fourth time in a row that we've paid dividend. And with all the capital that we have to spend over the next few years, that dividend was at a cover ratio of about 4, and we were comfortable with that.
Leonard, you get the last word.
Just one question. When you compare ARM to, for example, Bulletin or an Anglo-American, those companies have opportunities to exploit metals on the ground in Australia, in South America, in North Africa. And, ARM is a South African company that has most of its assets here, but it's a high growth company. What do you do next now to find the same growth trajectory that you're used to by going out of the country, by going out to different continents?
Most of the ore bodies we have still have significant upside. The step that we're taking into Zambia now is obviously, that's not only a step into a copper operation, but is a step into Africa. We certainly also have very good licenses in the DRC, so we're going to continue. And we have an exploration group that look at other countries in Africa as well. And we focus on the sort of metals where we have skills and expertise. Okay.